I do a lot of tutoring, and I notice that no matter which series, most people don't have a really good understanding of what a mutual fund is. We're really talking about an open-end mutual fund. There are closed-end funds that we're not going to talk about here. Maybe we'll do a separate video for that. But if you want to buy an open-end mutual fund, you may choose a family like American Funds, which I think is the biggest according to the assets under management. Their investment advisor is called Capital Research and Management, and they're the parent company to the distributor, American Funds Distributors. American Funds Distributors is a member of FINRA, a broker-dealer. So the distributor goes out and markets this product. The investment advisor for these guys would be Capital Research and Management. They actually manage the portfolios. And maybe I want to look at your balanced fund, so let's see what that looks like. It's pretty easy to get a quick overview on the website or the prospectus. You can see that it's a conservative fund. You can see that they keep their holdings pretty much to U.S. issuers, and they never go more than 75% common stocks. Those policies are set by the board of directors. What kind of holdings would be in this fund? Kind of vague. If you're just looking at the website or the summary prospectus or the prospectus, you get percentages. You don't get actual numbers of shares or even particular companies. And a lot of people could care less, I'm sure. But if you wanted to know that, you'd have to look at a different document. Let's say you need some additional information. Believe it or not, you could look at a statement of additional information. And it would probably tell you more than you want. I guess, yeah. No. Okay, thanks for offering. So we need to look at the portfolio to get a better idea of what's in here. They're also going to take us through a bunch of legalese. They probably even have a glossary of terms. There we go. What's actually in the portfolio? Oh, okay. You want to do some more homework? You see that when we say financials 10.8%, we mean these shares, 45 and some million shares of Wells Fargo worth about $1.25 billion at the end of 2011. Berkshire Hathaway, notice how 8,000 shares are almost worth $1 billion, you know. American Express, we have 16.2 million shares. They were worth $765 million, etc. Look how diversified we are, even within financials or industrials. That also reminds me, a sector fund might look just like this. You know, that'd be pretty volatile. But no, we got some financials. We got industrials, information technology, including Apple, Oracle, Microsoft, and Google. Even in the balanced fund, you know, you find a lot of the companies that would be in other types of mutual funds. Energy, consumer discretionary like Home Depot, the stuff you don't have to buy, but Starbucks, there you go. What was our Starbucks holding? About 2.5 million shares worth $115 million. So they're very well diversified. As soon as you put a little bit of money in here, you own a little piece of every security in the fund. It's a balanced fund, so we put 27% into debt securities. These are corporate bonds and notes, 9.35%, a lot of financial companies. We also have bonds in telecommunications companies and consumer discretionary. So we own the stock and bonds of Home Depot, for example, and probably the same for Walt Disney. We know what we're doing, you know. Energy, we hold bonds there. Some nice yield, 6.5%, 7.35. Nice yield there. PepsiCo borrowed money at 7.9%. Matures in 2018. Interesting. So how could the NAV stay the same every day? It almost couldn't. All the market values for these stocks and bonds and notes, including mortgage-backed from Fannie Mae and U.S. Treasury securities, it's unbelievable. The market value has to change. Plus, imagine all the dividends and interest that these things throw off into the American Balanced Fund portfolio. It's going to change the net asset value pretty much every day. So on net, we have the market value of our cash and securities. We have some liabilities, very few liabilities. And on net, our assets are $49 billion, give or take. So that's what the portfolio is worth. And that was just to give you the statement of additional information or the annual report. The very next day the markets opened, the numbers changed here for every single line and the total. But that's a pretty good approximation. It was worth about a $49 billion portfolio. How much income did that provide? So that's basically the balance sheet. What about they show us a different view of the holdings. Thank you. Can never get too much data. So that was the portfolio holdings, which directly relates again to this balance sheet. These are the assets. We showed you how we arrived at the $49 billion. And then we also subtract liabilities because we often borrow money just to pay out redemptions without having to sell any of those holdings. So on net, $49 billion. That's the balance sheet, assets minus liabilities. What kind of income are you generating? Well, the investment income is very impressive. All those stocks generated about $783 million in dividends. The bonds, notes, etc., generated $523 million in interest. D plus I minus E, right? Dividends plus interest is $1.3 billion, and then we take out all the expenses from there, the operating expenses. $121 million to the investment advisor, $182 million to the distributor, just for this one fund. $42 million to the transfer agent who handles redemptions and name changes, etc. Whatever administrative services are, not sure, but it's $30 million a year, etc., etc. So out of this $1.3 billion of income that the stocks and bonds generated, $383 million came out for expenses, and we were left with $923 million of net income. This is what we can distribute to the shareholder. If we pay out at least 90%, then the shareholder gets taxed on that amount, and the mutual fund doesn't. So when you're trying to picture what net asset value is, it just means every day all these securities change value, and a lot of them throw off dividends. So if the securities are basically going up more often than not, that's going to make your NAV rise. And also if they're throwing off interest and dividends into this American Balanced Fund portfolio, that's probably going to make the NAV go up as well. So hopefully that would help a little bit. I don't know if it looked good because the website recording is not always perfect, but you can certainly go to any mutual fund family website, look at a balanced fund, a growth fund, a bond fund, see what they have to tell you, and you might even dig as far as glancing at the statement of additional information. Either way, I hope that helps with some of the concepts on the test.